Okay, morning guys. Bobby, nice and early. Good to see you, mate. Good to see. Hope we're well. Welcome to the Morning Playbook. End of the week, 14th of August. So I'm going to just chat about obviously the markets and a bit of a holding pattern they seem to be in at the moment. Holidays in Brizzy. Oh, really? Oh, that's good to know. Yeah, a bit of a holding pattern the markets are at the moment, waiting on that US dollar move, which is basically waiting on the stimulus. So a bit of argy-bargy still between, what is it, the two parties, the Republicans and the Democrats. Both sides are blaming each other. It looks like Trump is stalling. Well, it looks like I can't figure out why. I saw last night news come out that he said no to extra payments for was it the postal service, which is basically him just delaying a postal vote, or not delaying a postal vote, trying not to fund a postal vote or put pressure on it, which is really just a political stunt for his to help his election chances. So if that's the case, then I don't expect anything to be approved anytime soon until they drop it. Was it the Democrats? Democrats drop those that fund as part of the package, a stimulus package. I don't think they will. It's kind of this back and forward. So what I'm expecting really, if nothing starts to get done and they keep playing politics, the market's going to, I would expect to start turning bearish because people will be looking at it going, well, no more stimulus. What does that mean? There's more. Unemployment is continuing. They were saying the unemployment, there's new unemployment benefits numbers. They picked up not as much as expected, and I think the continuing employment benefits dropped off slightly. So that was supposedly good news, but they're at massive amounts compared to historical numbers. So the unemployment situation is not good, and if they do go into lockdown again, then that's going to hurt. And I think as corporations, if they don't get any stimulus soon, there's going to be companies they're going to hurt. Companies are going to go into get into strife and potentially close up. I think there's already a lot going into administration or what do you call that? I was going to say lockdown administration, whatever the word is, default. I'll figure it out in about 5 minutes. So there's companies over there hurt, which means less jobs, all that sort of stuff. Okay, Jason. So I just can't see why, if they don't get stimulus soon, the market's factoring in a certain amount. It could start edging lower. I mean, you can see the US dollar sort of chopping around. It is range bound at the moment, along with other markets. But there's a few cracks starting to appear. Copper, for instance, got slammed last night, and that was a bit harder than most. Oil backed off. The Nasdaq did open and push higher as per usual, but then backed off into the close. Ended up slightly, but the last few hours of selling pressure. The markets opened in Europe and got slammed a bit. So it's like if they're hovering up at these levels and nothing happens, they're getting nervous. So what's going to happen if you keep getting slammed down? People are going to stop buying it up. It's as simple as that. And if they stop buying it up, what is that going to lead to? People are going to start getting nervous about holding positions from lower down. So it's that trickle down effect, which if it gets a bit of a run of steam, it could really start to sell off hard. So we'll just watch that. Keep an eye on that. So today we'll start off with the intraday action. This is a SPY. So this level here, this is only in a 5-minute chart, but the level I've marked up here is a 30-minute chart at 60.34. If it lasts through that, I'm sort of expecting that to get a bit of a run onto the downside. I mean, the SPY is a bit of a beast anyway. It can just take off to the downside and you're waiting for a setup and you watch it drop like yesterday, 60, 70, 80 points, and just watching it move, waiting for this setup. It's kind of like you got to, which makes it hard because if you're trying to sell, where was it? Here's the action move here. That was a tough one to trade because this is on a 5-minute chart. If I'm watching, then the one might have been a bit easy to see, but waiting for sort of a bit of a 5-minute pullback and then capitulation, It struggled to get it. You get this kind of action, which I'd love to see, up here. Right, so it's kind of a tougher one to trade. But I do expect if that goes through that level, we could get, if we get a shoulder to trade off, a short term, say a 5 minute, or even go down to the 1 minute time frame, there could be a short on there. But the key will be 60.27. If it can't, if it can't get through that, quick to bail, because it could easily chop straight back again and just clean out any shorts that have been building up. So I think even though the SPY, it could sell off on the open and then bounce back like it has the last few days. Probably not so much yesterday, but it has had a bit of a sell off and then bought back up. I think it's getting bought back up on the fact that there's no good or bad news on stimulus yet. So how long that will last, how long people will continue to do that on the back of stimulus expectations in the US, and the same in the US, is it'll get limited. It's, everyone wants to buy it because of stimulus, because it's going to keep supporting the market. Yet if they don't come out, and it looks more and more likely there could be less stimulus than expected, or it stays off the table for longer, who's going to be wanting to hold positions when you've got so many problems up at these highs, at all-time highs? The S&P is back to nearly all within, a few points of all-time highs. Now, the difference between now and then at the same level, there was no, really good employment levels. The economy was ticking along nicely. Now it's not. Everything that could happen wrong has happened. Yet the market's back up at those levels. Even earnings are nowhere near what they were at those levels, all that sort of stuff. So it's too much weight, I would expect. So it's just a massive disconnect, obviously, and that disconnect grows and grows, and it's like a rubber band. That disconnect can only stay like that for a certain amount of time before people just go, bang, that's it, have it enough. I'm going to lock away some gains. I don't want to be the last one trying to sell, which is pretty much going to be the mentality. The Aussie Hang Seng looks more like it's bullish off 25,127, although the close coming into was down here. The close of the overnight session was at 4:30 to 5, so it's a half an hour candle at 5 o'clock. So it closed down on this at this support, which, if you take out this last bullish action on the CFD prices, and because of the Dow dragging it higher, is not so good. So this could be a trap. I mean, it could be a trap. Open up, it suckers in a few buys, and then bank slams down through 25,127. Otherwise, it could just be we're looking for this kind of a pullback back to the open, or back close to the open, flush lower, and then hold the inside level and see if we can get a grind up to 25,463 and potentially higher. Because longer term, we're in a good little zone. Look at the MACD the momentum starting to lift, all that sort of stuff. We're in a good little zone where we could rally. But again, if the US dollar gets smashed and other markets get smashed, then don't expect to see a rally too much. SPY can head south, and like it was yesterday, was selling off. Hang Seng wasn't going anywhere. It was really grindy action. The Japan just opened and just gone up through 23,310. So that was a bit of a bugger. So it's getting supported by tech at the moment. Tech shares, and it's kind of bullish. They break up through there, see if they can stick. Maybe we'll get a pullback. So this kind of action, I thought it would flush lower, hold and go. It doesn't look like it wants to. Looks like it's on for young and old. So as long as tech goes up and we're thinking about stimulus, you would expect this to continue going up. If something changed on the NASDAQ and stimulus, this has got a long way to fall. You would expect anyway. Dow, just grinding higher. You can see that sort of push up. The close was down 435. I think it was at 6 a.m. So it's kind of here. So it's closed. It's rallied 50, 60, 70 points on the futures market, dragging the CFD higher. We could be capped at 28,003. We'll just see what happens today. Might get a bit of a flush, might get an extension up to this level, might get a push all the way up to 28,135. It kind of like the Dow aftermarket gets pushed up, gets shoved up. And we did have what was it? The European markets end lower. So the FTSE basically dragged the European markets lower. We'll just see what happens around this zone. I'm sort of less interested in this now. When the markets were, getting sold off, the Dow was the place to be. There was some good action, and that was sort of leading the markets around. Now it's not after hours. It's more, keep an eye on the Hang Seng, what it does, and other Asian markets, maybe the Nikkei. They're sort of doing things separately at this stage, and the Dow just knocked around. It will move coming in the European session, obviously, and it will chop around compared to the Hang Seng. But if the Hang Seng heads south and the Dow doesn't want it, it'll just go sideways, and vice versa. If the Hang Seng goes sideways and the Dow wants to go up, it'll go up. Okay, so we'll just keep an eye on those levels. Over to look at copper. I want to show you copper. We've spoken about this a few times now. Look at it, got smashed down, bounced back up, a bit of a flush. So notice this push through this high on this rally, and then capitulation was the same as what we saw, push through the high here, and then we got that capitulation back down again. The longer term, it's looking, I mean, that move itself is weak, but this move overall in the longer term time frame, maybe a 4-hourly chart, for instance, or a daily, is still a grind. It's still consolidating around those highs, meaning it's a stimulus factor. It's US dollar and stimulus based. Everyone's waiting for the same thing. We're waiting for stimulus. We're waiting for the US dollar to make a move. If people think that stimulus is not going to happen or it's going to be less than expected, that US dollar could move up, I would expect, because I think another $1 trillion has been factored in down here. That's been the talk for a while as the US dollar's coming down. Potentially, if we don't get that and we get they come to some sort of agreement maybe in the middle, there might be a bit of a rally into the dollar as shorts get closed, which means copper down, and that's what it's pointed to there. So copper sort of expectations are, down as well at this stage on US dollar, a rally in the US dollar or pressure up in the US dollar. But at the moment, I would expect it's probably going to bounce off this level, might get a bit of a grind back up again, but it'll be interesting to see if we start holding lower levels again. We've got, lower levels here, through here, and then potentially down again as this grinds down over the longer period. But then again, like I said, I just expect it to be any major sell-off to be capped on the downside because of what's happened in US dollar and stimulus. Oil, actually, let's just go to the US dollar. So US dollar longer term, we've got this 92, this rising support, and it was coming in around 92.50. It's still, roughly the same zone. So it can test down to these lows around that 92.50 and still be, in a rising, longer term rising trend. It's still, I would say, capped in a bit of a range. Maybe you could put your support down at that 92.50 zone. It could just, drift down here and bounce back up until something happens. If it's more likely there's no stimulus, if you start to see this edge higher or rise, or at least break through 94, then there's concerns that stimulus is off the cards. All right, and I do sort of expect that even if they come out with a stimulus package, the US dollar will probably get weighted because there's more dollars in the system to pressure it. Supply demand, more supply, same demand or less demand, then bang, US dollar head south. And that's the general consensus for the dollar at the moment. If they take a step off the pedal or take the foot off the pedal for stimulus, then we might get a bit of a grind up and just squeeze out all these sellers, especially this last capitulation down. And that means the longer term, I think it's a weekly or daily, that longer term support's holding. So it's kind of in a prime zone for a rally, but something needs to happen to breaking out of this range. And gold is linked, going over to gold and crude. We'll start with crude. All sort of linked to that US dollar, pressure on the US dollar. You're getting this sell-off on a rally in the US dollar, and vice versa. A move down the US dollar, you're getting rally in crude, and it's sort of the same. So everything's linked. Go and look at the US dollar and euro at the moment. They're basically lockstep in opposite directions. Last thing I just want to take a quick look at is gold. Now, even though I've got this push up, so what we always talk about, those two legs. So you've got a sort of a leg up off the lows, which you're going to expect from bargain hunters. We might get a pop up to say 1990. It doesn't mean that this trend down is over. So that's the case there. I mean, easy enough to get sort of a rally back up here. It sort of comes in line with that, and another sell-off. I mean, who knows at this stage? But again, it's not linked to fear or anything. It's linked to the US dollar. US dollar starts to rally hard because there's no stimulus. Bang, the gold's not going to hold up. There's going to be a lot of big flush lower. Aussie, look at that for you. Aussie, annoying. One we got short on yesterday, stopped out by a few pips, and then it hit its straps and went down as we expected. So I'm finding, unless you've got a massive stop, which I'm not prepared to take. G'day, Khaled, is it? How are you, mate? I'm not prepared to take a really big stop on the currencies. The moves are happening basically when I'm asleep. They're happening sort of the US session. You got the US dollar might head up, all European session, 11:30 on the dot, turns and heads south again. And vice versa, if it's heading down 11:30, it's straight back up again. So it's two different markets at the moment. It's got the European session that does one thing, and the US session is doing another. So it's just making, trading in sort of in our time zone coming to the European session a bit hard. You can expect the European session could be choppy. Sometimes you might expect directional play. Expected something on the on the Aussie dollar last night with a breakthrough was down through here, 60 level with a stop at 75. You can see it got up to about 80, yeah, 78, 80, so 5 pips or so, stopped out, went back down, just took out the high. So it's just searching for liquidity, these kind of moves. And we probably got caught in that search. The key level was through here on the downside, and on the upside it was at say 78, 87. So you had a 57, 87, 30-point range roughly. Right, so the market we got stopped into a trade in short, expecting a break of that. Didn't play out. We just got caught in that liquidity trap. So meaning it takes a key level, just searching liquidity, and it turns around and takes out a key lower high, inserts, whips back down to the lows, whips back down to take out that high before starting to get a directional move. And that was about, there you go, 11:30, coming into 11:30 open, the US Open, before it started getting direction down. I think that's when the US dollar headed rallied, and overall markets coming under a bit of pressure, I think, around that time anyway. So it looks like for now, this could be a lower high, and we could be looking down to 71.17 thereabouts. So it could be a good little short on. Again, I'm reluctant to go and sell in our session because it could be caught in the chop. So this market could easily, again, search for that liquidity, set up a key zone here, stop people in, wash them out on a bit of a rally, and then turn around and blast down, and stop them back in again, and then turn around and do the same thing into high. So it's just that search for liquidity we're talking about where the market's trying to pick a direction. I'd say at the moment, I'm not looking at this. If this can hold, if the markets can hold below that 71.55 zone today into the European session, it might be another short on this. Something like this, that sort of grind up. I wouldn't expect to get short through here because I think you'll be fodder for a bit of a squeeze back up again. But something like this, you can see down, 2 legs up, and then down. And that actually happened earlier, didn't it? That happened in the Australian session. So, but we'll just see how it plays out. But I think to me, overall structure, key resistance, it consolidated below there, took out some lows, might have to continue down again and then chop straight back up again. So again, don't know what it's going to do until stimulus is sorted out and the US dollar gets some form of direction. But it's still US dollars in quite a wide range. Euro yen, we'll have a look at that just for the hell of it. Euro yen, it's definitely heading higher longer term. It's just I'll have to go back a few steps, go back to the daily to see. It's up against this zone at the moment on the daily, so it's sort of coming to a resistance zone. We don't know if it's resistance just yet. Resistance, just because it's traded there before, doesn't mean it's resistance. It means you've got to start looking for a reaction. If you don't get a reaction, it keeps going straight up, forget about it. Then you're sort of looking for potentially that retest on the downside. If there's two things. You either get action chopping around like this and then heading south. Whoop, draw that properly. Or it just keeps going up and you're looking for that test to retest and then hold to go long. Because you know that's probably not going to be a resistance zone. It might just be a bit of a flush out. I mean, if you don't want to buy it on the break, especially with currencies and your bigger time frames, because you buy on the break, you've got to have a wide stop. I mean, where are you going to put your stop if you buy on that break there? It's going to be somewhere down here. That's quite a wide stop. You want to see it retest and hold so you can minimize your stop and not get caught in just a pure flush at that level and then come back in, doing, like I said, something flushes up and then you get caught in the wash and it starts holding below again. That's not what you want to do. Okay, so you want to see what's going to happen. You're at a key level, so you've got sort of three things. It just bounces straight off. You get a lower high to work a short into. It goes straight through and you get a higher lows to work a long into, or it's a flush. And then you wait for it to come back down. If it's a flush, expect further momentum on the downside for a bigger squeeze, because a flush is just trying to drag in buyers that they have to turn around and sell and get that momentum, create that momentum on the downside. So we'll see how that plays out. All right, that's probably about all I want to discuss today, guys. We'll just see quickly where this SPY has opened. Well, there goes my trade. Straight off the bat, good old SPY. All right, so it is still a washing machine at the moment. All markets seem to be a bit of a washing machine. So, anything that looks like a sell, you're better off just to buy it at this stage. Anything that looks like a buy, you're better off to sell it, especially on the SPY. So we'll see how we go. Focus will be on obviously the Hang Seng and other markets. Just see what happens at 11:15. All All right, guys, anyone that wants to join the Discord channel for some intraday action, we're going to be putting it through there just for now, just to see how that works and see if we can get it through faster. But otherwise, anyone that's subscribing to TradeSetup, just look at the, obviously, the major, everything will be coming through the app. All right, guys, enjoy your day, and we'll speak to you again soon. Cheers, bye. Enjoy your weekend too, by the way. And I'll see you on Monday.